Hello and welcome back to Chart Pattern Trading Masterclass by Wealthy Education. In this video, we'll talk about mastering volume analysis. So, trading volume, number one, you're not going to get it in Forex. The problem with Forex is it's completely decentralized. There's no real actual exchanges. It's all done through dark pools and liquidity from basically a handful of banks. So in that scenario, it's not going to be much use. However, in the stock market or anything that traded is traded on an actual centralized exchange like crypto or stocks, you have the ability to track volume pretty accurately. The volume of crypto might be limited only to that particular stock or exchange, but it at least gives you an idea. So, having said that, trading volume tends to pick up when momentum picks up or volatility picks up. And this can be worth paying attention to. So, let's go ahead and click on indicator volume. You can see there's a series of bars here. And the one thing that you'll notice here in NVIDIA is that volume does tend to be relatively stable. This is a high cap stock. This is a high volume stock, so that should not be a surprise. But notice this day here where we gapped lower and there was a huge red bar. Well, what does that tell you? That tells you that perhaps, we don't know for a fact, but perhaps we're going to continue to go lower because there was a huge push to the downside. Basically, more people were involved selling the stock. Just as over here, we had a big spike in green, had a little bit of follow through, failed at the next resistance level, but you get the picture. So it does undulate. And you can see that occasionally there's a huge spike like that, pulled back, rallied, but then we had a huge spike again. So let me go through a handful of stocks here and we'll just kind of see how things play out. Big, massive gap lower for Facebook or Meta. And you can see that kicked off the next leg lower. Big, massive spike. Here in volume, you can see we've gapped lower. We're trying to fill that gap, but here's something that I would pay close attention to in this particular scenario. Notice how there's a lot of volume to the downside, but to the upside, not so much. So what does that tell you? That tells you that people are much more confident selling than buying. Most of the time you're going to see this type of action where there is some difference, but there aren't major differences, right? But when you see a huge spike, then you need to pay close attention. And this is true on hourly charts. Big spike there, kicked off a major move lower. Let's go ahead and keep looking through the stock world here. Coinbase Global. So again, lower volume than Facebook, but notice big, massive spike. And then we pulled back. Then the next candlestick here, this one was a big, massive spike in price action. And while the candlestick was green, it was a gap lower. So yes, ended up positive from where it opened, but it opened much lower. So you kind of have to pay attention. You can't just go by the color sometimes. Notice we came up, we filled the gap. Notice the volume's dropping. Interest is waning. You can see we start to fall. So quite often you will see what some people refer to as a U pattern like that. That can be a continuation or it can be a reversal. What you need to pay attention to is the fact that we're at another extreme. There's also something called an inverted U, which is pretty much what you would expect it to be. It's just a hump, really. So you could make that an inverted U, for example. Notice how volume is picking up, spiking, and then it keeps dropping. That is a hint that perhaps trouble is on the way. So You can use volume to measure momentum, to see the strength of a trend, as long as there's decent volume. Although the reality is a lot of, especially bigger stocks, they like quiet. Look at how that went higher, and we didn't see massive surge. There was a massive surge there on this candlestick, and then the rest of it was, I mean, there were some bumps along the way, but it was pretty straightforward. Less volatility, higher pricing, typically, not always, but that's typically the case. The ability for volume to confirm like a breakout or a breakdown signal is certainly something worth paying attention to. So, this is what is known as a gap and go. So, this was a gap at the open and then it took off. Well, look at all that volume. Well, of course, it continued higher. Now, ultimately, it pulled back, but that gap and go pattern worked out. Gaps tend to get filled. So, here's a massive gap. Right here at the top, we formed a fairly voluminous candle to fill that gap, and then we continued down trend. There are other ways that you can look at volume for breakouts. Actually, let's go back. Let's go over to crypto. So, Bitcoin dollar. So, here's an example of Bitcoin consolidating right here in like a rectangle. Notice this candlestick here saw a bit of volume. But when we came back, we struggled a minute. And when we came back to the same rectangle, notice this candlestick kicked off a rally. Um, that's typically how people will use it. A little bit of a double bottom here, which is a pattern where you test the bottom twice in a row and it bounces. Notice here, big red candlestick, although should be noted that it was much deeper red than when it closed. So a lot of volume, people buying later in the day. Over here, we had another pickup in volume. So that's a sign that perhaps we are ready to continue going higher. There's one of those U patterns. This is an inverted U pattern over here. You can see that the market kind of drifted a little bit lower after it. So, I mean, volume's important, but I wouldn't necessarily say that it is the be all end all. It's something that helps you with other signals. So, like a pattern, like a rectangle. If you break out of it and you have volume, that's a good sign, that type of thing. If volume starts drifting lower and you're a little bit overbought, you've been going straight up in the air. So let me put volume back on here. Notice this big, huge stretch in volume, big, huge stretch in volume, big, huge stretch in volume, and then we're just kind of drifting lower. Well, we got a pullback. That really, if you think about it, shouldn't be a huge surprise. Um, and you try to track that with like the RSI got overbought here and here. You can see that you had a little bit of pullback. In this case, was it a shorting signal? Maybe, maybe not. But what it could be is a signal to take profit. So that's another thing too that you have to look at it through the prism of. In the next video, we'll hit on mastering trading psychology.